Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is the equity markets, and what we'd like to do is look at some of the positive and negatives going on in the equity market. Of course, this morning we have a little bit what I call a crisis gap down. News out of Greece that they're closing their banks for the week, and that's to be seen how that all develops. But let's take a look at some of the positives coming into the week. Basically, you have the NASDAQ near all-time highs, pretty much. Still above its 50-day moving average, although it's a little bit below it this morning, and it's fighting its way to get back above it off the lows. Pretty much in the Russell 2000, the small cap index is also near its highs, again indicating there is a risk-on type of appetite. Now, also what's going on is you see in a lot of the sort of more aggressive groups as consumer discretionary, technology, healthcare, with the biotech component, there's an aggressive component, continue to act well, whereas things like utilities, energy, and staples are lagging the market. And that's really the kind of thing you want to see in a good market. And one of the other things I view as a positive is the sentiment. Although the market's near highs, everyone's really pretty bearish or neutral on this whole market. Everyone's waiting for that correction. And that correction's not really coming, although we'll see how today develops. And that's actually a very good positive for the market when the crowd's very negative. Now, going on to some of the negative things, well, some of the things that are dragging on the S&P 500 are those previously mentioned sectors, basically utilities, staples, and energy. That's dragging the S&P 500. So that's a bit of a negative. Also, the Dow and the Dow transports are pretty much trending down and again lagging the whole NASDAQ market. So that could be viewed as a negative. Now, also some of the things we saw last week coming into this week is leading technology stocks like in the semiconductors started to get hit. The SMH fell below its 50-day line. So, you got to be a little bit careful there. Another hot area was the software, cybersecurity space. Some of the stocks in that space were getting hit. So you got to, take a look at your positions, mind your stops, and we'll take it from there. Now, as far as the Greek crisis, it's kind of hard to think that this is something new. This has been going on for 5 years. So if someone wasn't prepared for something like this, it's sort of interesting. So we'll see how that develops, because a lot of times these crisis gap down in the mornings are a really good buying opportunity. However, you need to see the bounce first, so I wouldn't be chasing it down here. But however, if we do see the bounce and a follow through the next day or two, pretty much it's kind of a buy the dip kind of market. So, as always, let price and volume be your guide. A little bit of caution here. There are some positives and some negatives may start developing. If we close the day on greater volume, that might be, not so good and send the market in correction. So be careful. So we're just watching for those and watch those levels. On the NASDAQ, I'd look to see if it pretty much right about 49.72. If it stays above that, we're still in pretty good shape. On the S&P 500, the 200-day moving average is at about 20.50. If it stays above that, we might still be in pretty good shape as well. So as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.